always think it's good to be able to balance off our stats and use that as context.
And just to say it's cheap is not a reason to invest somewhere, right? And if you look at the two leading capital cities in Australia right now, have the largest population growth in the country, it's no surprise Perth leading the charge. Closing in very fast is Melbourne.
If I was going to ask anyone on what I should be doing about investing in Melbourne, it'd be calling you, mate.
Yeah,
so thanks a lot for your time, and hopefully we can chat soon.
Absolutely. Good work. That was fun.
The next podcast coming up now, the Follio property podcast.
The amount of data available in Perth is scary from a privacy perspective, but it helps a developer like me understanding what it is I'm buying and what I can do with it.
Trent Fleskens, thanks so much for joining us today. You've been listening to the Follio property podcast. Gentlemen, this is the Follio takeover of the Perth Property Show earlier today for part 2. It wasn't heated enough in the podcast studio, I don't think. So I want to just lay out 5 questions, bit of a debate, and see where we go from there. But there's a lot of questions about Perth from both of you. Lachlan obviously is mentioning all of the fundamentals from a Melbourne perspective. If you could sell one market, so Trent, you're going to be selling Perth, Lachlan, you're going to be selling Melbourne, what would the one key fundamental there would be making a decision?
I think it always comes down to economic growth, right? Economic growth brings immigration, brings people, takes it from other states as well, which creates a basic demand for shelter.
I think I said on the podcast, there's only been twice in history where Perth's been more expensive than Melbourne, and we're in that period of time now. But at some point in time, markets will naturally go back to their default norm, and Melbourne will be repriced. Melbourne's hierarchy in terms of median house price will go back to where it should be, below Sydney, and Perth sits below that.
Let's look at a 5-year position. So if we're talking in 5 years, where do you see the Perth market in 5 years, Trent? And Lachlan, where do you see the Melbourne market in 5 years?
Yeah, well, I guess that really comes down to capacity. As long as immigration continues in the way it is based on economic activity, jobs, we don't continue to see growth that moves into the mid-1 millions.
And I think we've spoken about a little bit on the show, our show anyway, is that we won't enter a market unless we see 50% runway. And I don't think I can stand here on heart that I can honestly believe that Perth will do more than 50% in the next 5 years. Definitely could, and I'll never say never.
What's the biggest risk for Perth and Melbourne doing? You think
macroeconomic events outside
both cities,
Yeah, without, there's a lot of volatility on an international level at the moment. And like I said, our indexes, when you look at supply and demand, both of us can get a really good read on the market. I think within probably a few percent in the next 12 months, 2 years, you start getting a little bit more loose with those predictions. But certainly in the next 12 months, I'm super confident that both of us will get within 2 or 3% of the percentage of growth that these markets will do.
If there was a large event, maybe China invades Taiwan, how then that ripples onto Australian money markets, you then have to ask, well, yes, obviously it has an impact on Australia's money markets. That does then ripple into Perth and Melbourne's property markets. I'd suggest it possibly has more of a risk in Melbourne's, because Melbourne has a far higher correlation with the financial sector than Perth's. And it will then just come down to the basics of where will people want to live in situations like that, and will they still have jobs where they want to live? You've got to make your own decision about that with regards to whether you're in Melbourne or whether you're in Perth.
Money typically flows to where it feels safe, and because residential real estate is a tangible asset as shelter, Melbourne and Perth have continued to perform. Both Melbourne and Perth in the GFC didn't falter.
So my final question to the both of you would be, if you had $850,000 in your back pocket to invest in residential real estate, what type of asset would you have?
It'd always be a detached house with subdivision potential. Medina, Parmelia, Aurelia, there are still 3x1s on 800 square metres, less than 850. You can do it in Balba still, City of Stirling, suburbs there. You can do it in the City of Wanneroo, suburbs like Girraween, Kundula, Lockridge, Beachborough was getting tough actually. Those are probably the places, if I had 850, that I'd be buying that has to have subdivision potential.
Melbourne, I'm looking predominantly in that mid-eastern ring. So pitch anywhere from 10 to 30 k's east of Melbourne. You're picking up not subdividable blocks, but you're getting some land, typically some sort of 350 to 600 square metres, 3x1s, 3x2s. Second to that, if you're going to go on the outer ring outside of that, I see really good value in Geelong.